This episode is brought to you by MSCI Wealth Manager. MSCI Wealth Manager is designed to streamline client portfolio management for investment teams and the financial advisors they support. Leveraging MSCI's financial expertise, firms can deliver personalized portfolios at scale and facilitate efficient portfolio design, monitoring, and investment proposal generation while ensuring consistency with the firm's investment strategies. MSCI works with CIOs and investment teams across major banks, brokerages, RIAs, multifamily offices, and external asset managers to make it happen. Learn more at msci.com/wealthmanager. Welcome to the WealthStack Podcast. I'm your host, Shannon Rosic, the Director of WealthStack Content Solutions. Today, we're exploring the transformative shift toward private markets and how wealth tech is enabling advisors to navigate this new landscape. I'm fortunate enough to be joined by Michael Kim, CEO and President of AssetMark, a leading wealth management platform. Michael, welcome to the show.
Thank you, Shannon. Great to be here.
So I always ask my guests, I love to start with your background, and it is for sure the hardest question you'll get this entire conversation
Okay.
because I want to know, and our listeners want to know, what makes Michael, both personally and professionally.
No, that's great. Thank you, Shannon. And again, thank you for having me here. I'm looking forward to our conversation today. That is a tough question to get us started here. Shannon, what's been interesting is I've been serving financial advisors for, I'm dating myself here, but almost 30 years now. And I got to tell you, I love this business. I love financial advisors. I think it's one of the most noble professions in our communities. And you know what's interesting, Shannon, is when you get to do what you love doing, it is just simply so gratifying. We often talk about our mission here at AssetMark, and our mission is to make a difference in the lives of our advisors and their clients. And I feel like I've been fortunate enough to be in a position where we can make a difference, myself, alongside with 1,000 plus of my teammates, my colleagues, and we are making a difference every single day. And it's simply us doing what we love doing. So that's a little bit about sort of what makes Michael Kim, and I'm sure we'll get into a lot more detail, Shannon, throughout the conversation here.
All right, I'm going to keep poking at that because I want to know also personally, you don't have to go too deep, but, just give folks a sense, is you're a busy guy. So, outside of work, what do you do to disconnect?
Yeah. So I have an incredible family. My wife, she and I, we've been married for 30 years now. We have 3 adult children, and we love traveling and spending time with our family. The other sort of passion, Shannon, is I'm a big tennis nut, and I love the game. That's where on weekends or holidays, there's a good chance that you'll find myself and my wife out there on a tennis court. What I love about the game is not only is it a great way to have a workout and just sort of fine tune your game, but it helps me think about different strategy and really stay competitive. And for those of you that play tennis or golf or other sports, you know what I'm talking about. It is just awesome to be out there, run around a little bit, have, just a great physical activity, but also really think about the game and keep your mental sort of focus as sharp as possible. And of course, it's a great excuse to have a nice cold beer afterwards.
Right. That might be the most important part. So then as an avid tennis player, I have to ask, how do you feel about all these pickleball courts popping up everywhere then?
Yeah, it's the new rage, Shannon. I mean, even at our court, even at our club, we converted, 2 or 3 different tennis courts into the pickleball courts. And I enjoy pickleball as well. It's a fun, also a very social sport. And when we have friends in town, that's the first thing that we do. We take them out to the pickleball courts. It's just a great way to just, spend time with our friends in a casual sort of setting. And of course, after a couple rounds of social matches, then the real competitive spirit kicks in, Shannon, and that's when the real fun starts. But I love the game, and it's a great way for us to kind of sort of stay fit out there.
Love it. And you've actually been at the helm of AssetMark since 2023. You've been with them for a while, but truly as, president and CEO, and you had a really significant tenure within the company. So Can you just share a little bit about your journey and what's ultimately led you to this leadership role?
Yeah, no, thank you, Shannon. It's definitely been a journey. So I joined the firm back in 2010. Prior to AssetMark, I spent a number of years running the RIA business at Fidelity Investments. And so again, like I said, I've been fortunate enough to work with investment advisors, financial advisors for many, many years. And I just saw a very unique opportunity to join a firm that was really at that early stages of doing something spectacular. And so it was an opportunity for me to join this incredible team here at AssetMark. And, I've had a number of different executive responsibilities, everything from kind of the national sales manager to a chief client officer to president and CEO now. And, one of the things that I think is so compelling about our organization is well, a couple of different things. One is, we have, in my opinion, the best team in the entire industry. I got to tell you, I said this earlier, Shannon, when you do things that you love doing, it just makes everything gratifying and as enjoyable as possible. But imagine, Shannon, if your teammates, your colleagues actually love what they do even more than you do. And so I just feel so fortunate in that I'm surrounded by my colleagues who are just so passionate about the business. The other thing that I think is so fascinating about not only AssetMark, but just our entire industry in general is that it is constantly changing. It is constantly evolving. I mean, we're going to spend a lot of time talking about independent advisors, private market investments, and so forth. Who would have imagined a few years ago that we'd be talking about private market investments as the new rage, right? And we absolutely do believe it has such an important part, and we'll get into a lot more details later. But just the opportunity to kind of keep up with all of the changes and the evolution and really sort of studying kind of the role and the impact that the independent advisors make to their clients and opportunity for providers like us to be part of that support model, that ecosystem. I can tell you, it's fascinating, it's challenging, it's humbling, and it's super gratifying. And so when I think back to, I guess, my journey that started in 2010 with AssetMark, those are just some of the things that have really helped us sort of stay focused. And here's the best part. I just feel like we barely scratched the surface, Shannon. And as I like to say, the best is yet to come. And we look forward to kind of that next chapter of our firm's evolution in supporting advisors.
Well, I love that because 15 years in and you are still clearly so energized, not only about your role, but the company itself, and just hearing you speak so highly about your colleagues. It's just really nice to hear. And, it's interesting because I think a lot of folks in our space may know AssetMark as a TAMP, but it's obviously much more than that and has certainly evolved over the years. What else should our audience, our listeners know about AssetMark, or what do you wish they knew?
Yeah, no, it's a really interesting question, Shannon. And when you think about TAMP, it stands for Turnkey Asset Management Provider. And one of the things that we often talk about is gosh, we understand that that's become sort of an industry label, if you will, but we're so much more than an asset management provider. When we think about our services, it's asset management, it's digital technology, it's our service and consulting. We often talk about sort of this community of like-minded advisors here at AssetMark. And I can go on and on and on. And so when we think about our value, our services for financial advisors is, yes, asset management is an important part, but one of many different components that make up the key services for our financial advisors. A couple of other things to mention quickly here, Shannon. When one of the interesting things, and I alluded to this evolution that we're all sort of witnessing in our industry, when we look at sort of the impact and the value that the advisors are delivering to their clients, they are not only a trusted advisor to their clients, but they're also business owners, as you know. And so part of sort of our thesis is, I guess, in the spirit of how do we be more than a TAMP, how do we provide business solutions to the advisors so that not only are they making an impact as a trusted advisor to their clients, but we make them the greatest CEO of their business. And so whether it's technology to help them scale, whether it's compliance and administration so that we help protect their business, and of course, thinking about growth. At the end of the day, it is all about growth. In fact, we have a phrase here at AssetMark. We say that growth is life. And when we think about growth being kind of that seed for life, we want to make sure that we're doing everything we can to help our advisors grow. And And really what that means is making sure that the advisors have access to all of the different capabilities to serve their clients and run an incredible business. One thing that maybe I'll wrap up with this here, we have a chance to host our best clients at one of my favorite resorts in the entire country, the Ritz-Carlton in Santa Barbara, the Boquero Resort, and it's a spectacular resort. Imagine if someone sort of said, yeah, that's just another hotel, right? And so may not be the best analogy, Shannon, but when I think about, all of the amenities, incredible view, the beaches, and I just learned this the other day, Shannon, that they have access or they're close by to a kind of a wine country in the Santa Barbara area. And so the point is they deliver an incredible experience to their guests. And in a small kind of a way, again, may not be the best analogy, but when we think about our services, it's much more than just a TAMP in that we provide that unique experience for our advisors so that they remain that trusted advisor for their clients and that great CEO for their business.
All right. Well, I'm formally inviting myself to this. So please, I'll be looking for my invite. That's great. So I want to get into the meat of the conversation. We promised folks we talk about private markets here a little bit. So just kind of want to set the stage because AssetMark recently transitioned to private ownership under GTCR. So I'm curious, how has this shift influenced your strategic vision, particularly concerning private markets?
Yeah, no, it's and speaking of evolution, we at AssetMark, we too have been on this evolutionary path as well. And so Shannon, just maybe a bit of background and context. Last year, about this time of the year, we announced a sale of AssetMark to GTCR, one of the leading private equity firms in the entire industry, and frankly, one of the private equity firms that have the longest history in the private equity industry. And so we were just super excited and fortunate to partner with a great firm like GTCR. Prior to this transaction, we were a publicly traded company. And, while every capital structure has its sort of pros and cons, being a privately held company with the backing and the support of a great partner like GTCR, it allows us to have a much more of a long-term strategic focus. And what I mean by that is, Shannon, as you know, a public company, and again, I remember doing the earnings calls myself. Every quarter, we were on that proverbial treadmill, and it's an important part of kind of an operating rhythm of a public company. But boy, I got to tell you, being a privately held company, it allows us to really invest the capital for the long term and really creating long-term value to our clients. And then the second thing is having a sponsor like GTCR who has a number of other portfolio companies in this space, in the wealth management space. So they bring this level of expertise, connections, insights, like private markets as being a great example of that. They're one of the leading and the largest counterparties in this entire private market industry. And so it allows us to sort of connect with them, dialogue with them, and getting their perspective on best ways to deliver products and best ways to serve our clients. And so it's been a fantastic journey. Last thing I'll mention is we'll talk a lot about the trends, and there are many companies, again, us being another, I guess, data point, Shannon, in this trend of public companies going private, just given sort of these types of benefits. And so we're super excited to be a privately held company. And of course, even more excited to have an incredible sponsor like GTCR to help us, to support us, throughout our journey here.
Well, perfect segue then into our first segment that I call Stats All, folks, because, and you alluded to it just now, because there are a number of publicly traded companies it's really just decreased over the years. For reference, and I think it was 2015, there were approximately 14,000 publicly traded companies, and today there's less than 4,000 publicly traded companies. So what implications does this have for retail investors and advisors?
Yeah. No, it's such an important question. And so let me just double click on some of those stats, first of all, and we'll get into the implications for the investors. And so Shannon, you're absolutely right. In about a 10-year, actually less than 10-year period, the number of publicly traded companies went from 14,000 to less than 4,000. 3,687 public companies to be exact. In fact, you know what's ironic is I think many people know the index Wilshire 5,000. Well, we don't even have 5,000 public companies today, and so it's kind of ironic that we're still using that type of a benchmark. Number two, when you think about some of the larger sort of businesses and companies out there, let's just say those companies that have annual revenues of more than $100 million, 90% of those companies are privately held companies. So think about that, right? So the largest companies in the country, $100 million or more in revenue, 90+% are private. And then the third stat, which I think is super compelling, is we often talk about building diversified portfolios for the clients, mitigating concentration risk, et cetera. But did you know that the Mag 7 stocks, the 7 tech stocks, they represent over a third of the S&P 500's market cap?
Which seems concerning.
Which is super concerning. And if you think about kind of the profile of some of the older investors, they're thinking about risk mitigation. They're thinking about diversifying and really avoiding that type of concentration. And in many cases, unbeknownst to them, right, that they have this super high concentration in technology sector. And so part of what we think about is gosh, how do we deliver for the benefit of the investors? How do we deliver the most diversified portfolios, not being concentrated in certain sectors? How do we build a portfolio that gives the investors access to some of the best companies in the world, privately held companies? And how do we ensure that the investors keep that long-term horizon? As you know, we're going through some choppy, volatile environments these days for a host of reasons. And so part of what we really talk to the advisors about is gosh, how do we help you, the advisor, and of course, their clients keep that long-term focus? And privately held, private market investments, we believe, is an important part of the broader asset allocation model to help the investors keep that long-term focus and not be subject to the day-to-day bouncing around of the markets. One of the key things that advisors do, the most successful advisors do so well, is to really manage the cycle of emotions for their clients and really educating the clients to make sure that they're not riding the emotional roller coaster ride of the day-to-day markets and really helping them keep that long-term focus and ultimately the goals that they have, whether it's retirement goals or income goals and what have you. And so private market investments, we believe, absolutely is a critical part of the broader asset allocation approach to help meet those goals.
So what major shifts then are you seeing that are driving this increased demand from investors to access things like private equity? And as we all know, alternatives are a hot headline right now. And what is AssetMark doing then in particular to help advisors navigate this with their clients? Because as we know, private investments often come with complexities like limited liquidity and transparency. So, how are you helping folks navigate that? And even, what technology are you leveraging to really demystify these aspects for advisors and their clients?
Yeah, no, it's such an important point. Let me actually start off with some of the, the risks associated with private market investments, because some of the points that you alluded to are just super important. So unlike mutual funds or ETFs or individual securities, you're absolutely right in that public market investments, they don't have the liquidity, they don't have the transparency, and they don't have kind of the day-to-day sort of access that the public vehicles have. And so, part of what we really work with the financial advisors on is how do we help them educate their clients about these types of risks? And part of the responsibility that we take on for ourselves is recognizing kind of these differences. How do we leverage technology to really mitigate that type of complexity. So as an example, Shannon, two things I want to mention. One is, rather than sort of having the advisors pick individual private credit fund or private equity fund and build it into an asset allocation approach, what if we actually sort of own that responsibility and had the technology to automate the implementation, the rebalancing, the reallocation? As an example, we often talk about 60-40 balanced portfolio. What if it was 50-30-20 type of a balanced portfolio, and that 20%, of course, being allocated to private market investments? And our state-of-the-art UMA technology allows the advisors to look at the private market investments as just another mutual fund or ETF or individual security or even SMA, and what we call as a sleeve within the UMA portfolio. And again, nobody else is doing this today, and it's an opportunity for us to really own this space, leveraging sort of the current processes that we have today, plus some of the unique innovation that we're delivering. And so we believe, Shannon, that we have an opportunity to be a leader in this space and delivering that UMA approach, including the private market investments, as an important part of the overall asset allocation. And then one last thing I do want to mention here, this is super important. In addition to the technology that automates this entire process, what if there was a due diligence function or due diligence team that has been recognized as the top gatekeeper in the public sector to apply their expertise? We often talk about the 5 P's of due diligence, the people, process, philosophy, etc., to apply that in the private market side so that the advisors and ultimately the clients have access to the experts in selecting the right private credit fund, private real estate, infrastructure, and what have you, as part of the overall asset allocation, so that the advisors don't have to do the research and take on this important responsibility for themselves. It is a wonderful opportunity for us to not only be a trailblazer in really automating a UMA experience, including the private markets, but for us to own that fiduciary responsibility of due diligence, the selection, the ongoing monitoring, and making sure that there is a proven process behind why certain funds or certain vehicles were selected for the portfolio. Shannon, as you can see, I can go on and on about this topic,
I
but
love
I'll
it.
pause here, and hopefully that gave you some food for thought on our process.
Well, I'm curious too, because this is generally an area of the market that's been reserved for more ultra high net worth, high net worth folks. So is there a specific criteria that advisors should be considering before even recommending, private assets to clients?
Yeah. No, absolutely. And first and foremost, we believe in education, and we believe that one of the most important things that advisors must do is to educate their clients about the risks associated with the private market investments, all these components that we talked about earlier, but also the practical implications of what that means. And of course, we provide all the education content, client approved materials, so that it just makes that conversation that much easier for the advisors to have that. From a product perspective, you're absolutely right. Traditionally and historically, the private market investments were reserved for accredited or qualified purchasers with certain income and sort of net worth levels. One of the things that we're really sort of seeing, and we absolutely believe this type of trend is going to proliferate even further, is really the democratization of the private market investment. So an example is interval funds. Now, interval funds have been around for a while, but boy, there's been a huge uptick in the different variety of interval funds in recent months. And it really allows the access of these private market investments to come down market, so that a mass affluent to high net worth client who may or may not meet the accredited or the qualified purchaser rules can have access to these interval funds. The other important part is interval funds, as the name applies, has certain interval windows in which there can be liquidity. And so it's not sort of quote unquote locked up for a number of years. It does provide sort of more frequent liquidity windows. Of course, not as frequent as publicly, traded mutual funds or ETFs. So those are sort of the product innovations, Shannon, that we are seeing. And right now, the first phase that we're targeting is to really leverage the interval funds as really the allocation vehicles in this UMA construct that I alluded to earlier. And then phase two will be to really look at some of the key kind of drawdown funds or the feeder funds that could be appropriate. We want to make sure that we have an opportunity to really support those advisors that are really looking to deliver these types of non-correlated, non-traditional investment vehicles to their clients through interval funds. And we believe that that's going to help the advisors deliver that right solution for their clients.
So where do you see the biggest opportunity then for technology to enhance that advisor-client conversation around private markets? We're obviously on a tech podcast, so I do have to ask about AI a little bit, and how AssetMark is maybe utilizing that technology right now.
No, absolutely. And it seems like we can't have a conversation without talking about AI these
Sorry.
days. And so, no, and honestly, it's one of the key pillars of our overall strategy. And in addition to kind of our curated investment approach, which obviously includes the private markets, our service being one pillar, and then digital technology being the other pillar, is such an important part of our overall services. And we too are on this journey and this evolution of our technology sort of enhancement. In fact, we actually just hired a new executive, Alex Pape, who just joined us. He was a technology executive at a number of other firms. And part of what we're looking at is not only things like the UMA technology to facilitate the private market investments, as we just talked about, but how do we help the advisors from a practice management and from a client engagement perspective, leveraging AI. So as an example, Shannon, what if a provider like AssetMark were able to, again, obviously leveraging AI, to analyze the book of clients that our advisors have, and based on sort of the profile of those clients or maybe certain subsegments of the clients, and then, of course, what may be happening in the marketplace, what may be happening in terms of their current investment holdings, et cetera, and provide what we call a next best action, right? A next best action for that advisor to effectively engage that client. So as an example, what if there were clients who were looking to maximize the income distribution coming out of their portfolios? And given what's happening with the interest rate environment, this process would recommend certain actions or certain steps that the advisors should take for these 20 clients in their book of clients. And so that's really the journey that we're on. We're actually we've actually hired a digital sales enablement leader. That's a fancy title, huh? Digital sales enablement leader, to help us with this type of a process to help advisors understand, what can I do now to have that biggest impact on this group of clients based on what may be happening in the market and their client situation. And so that's just an example, Shannon, of some of the things that we're doing to leverage AI to deliver that high impact to our advisors, to help them be the hero in front of their clients. And so more to come on that front, but that's another area that we are super excited about.
All right. Well, before we jump to our next segment, final question, because I love a good roadmap segment. What is on the roadmap for AssetMark? Anything you can tease for the next 6 months or year coming down the pike?
Yeah. Oh my gosh, Shannon, we've been busy and we'll continue to be busy here. And maybe the umbrella theme here is really around experience and growth. And so what we mean by that is this. As I just mentioned, this type of a digital sales enablement program to help advisors not only grow through these next best actions, but create that unique experience for their clients. What if there was a tax managed services program where it transitions a portfolio from another platform over to us in a most tax efficient manner. And oh, by the way, it automatically realizes losses, not just in fourth quarter and December of the year, but every single day. And what if that same program delivers a customized real-time tax report to Mr. and Mrs. Client that shows not this fancy, sort of tax alpha or what have you, but real dollars of, Mr. and Mrs. Client having saved $4,620 in taxes for that month. And this is, I can't say enough about, our tax managed services program, TMS. Shannon, in fact, last year, 2024, we were able to measure a tax savings for an average client that's enrolled in this program of over 120 basis points or 1.20%. In many cases, Shannon, that's actually more than the fee that the advisor charges. And so the client is actually getting this not only huge tax benefit, but the advisor is, again, looking like a hero to their clients. So tax managed services, direct indexing is another product that we just recently launched. And one last thing that I mentioned under the heading of growth and experience is we are going to be launching what's called a self-directed brokerage account, or SDBA. Shannon, this is a simple way to explain this is, virtually every sort of working sort of client has a 401k account. And so what if we had a program that allows financial advisors to go to the clients that they're serving today and be able to manage their 401k account, just like any other account, without the actual rolling it over to an IRA and what have you, because they're still working. This window, this brokerage window, allows the advisors to manage that client's 401k account with the managed account strategies and the fee debiting and all the reporting that they would have on a regular account. And so self-directed brokerage account, SDBA, that's another program that we're super excited about. Anyway, we've been busy and we'll continue to be busy. It is all about delivering that unique experience and the growth opportunity for our advisors.
Absolutely. And just providing that holistic view for advisors too.
That's right.
So like you said, going down this road of self-directed brokerage, that is what advisors are clamoring for. So it certainly sounds like you have a great vision moving forward in this ever-evolving space. But Michael, I do want to jump to the next segment of this episode that I call Ask Us Anything, where I've gone out to the social universe and asked folks to submit questions they want answered by you. And we had a few folks slide into the DMs this week. So if you're ready to be put in the hot seat, I'll hit you with a few questions.
Okay, let's do it.
All right. First one we got. If private investments aren't priced daily, how do I explain their value to clients during volatile public markets?
Yeah, no, it's such an important question. And, private market investments generally are not priced daily. Interval funds, they may have a quarterly valuation, and more the traditional sort of the drawdown funds that has even a bigger lag in terms of valuation. And Shannon, we talked about the importance of the education upfront, and this is at the heart of the education for the clients. It is so critical for the clients to understand that there isn't going to be a daily price or net asset value, or they can't go to a website and look at, the price of these private market investments. And because again, that's just the nature of these vehicles. Having said that, the return profile of these private companies should be much better. And of course, it really helps the end clients have a longer term view in terms of meeting the goals and the objectives. The mantra here is to make sure that the clients remain focused on achieving their retirement goals, maybe their income goals, college savings, or sort of saving up for their dream house, not so much getting caught up in the day-to-day market fluctuations. And so that is a critical part of the education that's required. And frankly, that's one of the benefits of being invested in private market investments, so that you're not having to go through that emotional roller coaster ride that we talked about earlier.
All right. Well, one more for you. I've had clients ask why they should invest in something they can't easily sell. What's your favorite go-to analogy to help explain that, or how do you explain that in general?
Yeah. So one of the most popular and frankly the most successful investment opportunities has been real estate, right? And so as we all know, real estate is not a liquid investment, but we see, we all see real estate every single day. And so think of real estate as an example. And that's an example that we share with the advisors to use as an analogy as they're talking to their clients. You may not be able to look up the price on a website of a certain house or a building, but you know that it's there and it will generally over time, it will appreciate. And so that's how we think about the private market investments. And actually, there's generally 4 different types of private market investments. People often think of private credit or private equity. While those 2 are very popular, but there's infrastructure and real estate as the other 2 types of very popular private market investments. And so think of real estate as an example, as an analogy to share with the clients when those questions come up, from clients.
All right. Thank you for answering those questions. And I appreciate you being put on the spot. But we have come to our final and my favorite segment that I affectionately call Stack It or Whack It. Yes, I have t-shirts to go along with it. So, Michael, I'm going to throw out a few technologies and they're not always necessarily wealth tech related, sometimes just random ideas. And you tell me if they are essentially worth the hype or not. Okay. So I have 2 for you. Number 1, AI-driven portfolio customization tools, stack or whack?
I would say whack, simply because investing is an emotional process. Investing is about working with the clients and really understanding the goals and the objectives and the dreams of the clients and having the portfolio reflect those goals and those dreams. And so, with all due respect, I'm a big, technology AI fan, but there's no substitute for that emotional connection that the trusted advisors have with their clients. And so, and then maybe at some point, the technology will innovate where they can go ahead and implement those types of human factors, if you will. But for the time being, let's whack it, Shannon, and let's stick to the good old fashioned human to human connection there.
Well, I do believe the future of the industry is still very much human, so I'd probably have to agree with you there. Yeah. All right, last one. And I had another question picked out, but now that I know that you are a big tennis fan, I am going to pivot my question. Okay. Stack or whack when it comes to things like adding sensors to your tennis ball or tennis racket to give you stats about how you play. So things like ball speed, rotation, speed with your backhand. Is that a good idea or just more of a distraction to your game? Stack or whack?
Yeah, that's a great question. And so I would say it's a hybrid. And what I mean by that is, first and foremost, you can't get better if you don't have the data, right? And so I love the data because it gives me the insights into not only our individual performance, but really all of the game and really the business that we're running. And so I'm a huge believer in data, insights, and really start understanding the insights and what the trends from those data are telling us so that we can get better. With that in mind, Shannon, the data and the insights are important, but it ain't going to mean anything if you're not out there on the courts and actually investing the time to work on the game. And to me, I draw an analogy to our business environment. It is one thing to look at all the trends, or one thing to study the perspectives and the data points out there, but you gotta work on the business. Just like working on the tennis game, you gotta work on the business. And we talked earlier about being trusted advisors, but also being that great CEO of your business. And so that really is just another opportunity for us to underscore the importance of working on the business. And we at AssetMark, we've been supporting advisors, over last 25 plus years. And we're looking forward to, Shannon, that next chapter of us helping the advisors work on their business.
Love it. Well, Michael, this has just been truly an insightful conversation. Just quickly tell our listeners where they can just learn more about you and AssetMark and what you're working on.
Yeah, no, thank you. And Shannon, first of all, thank you so much for this opportunity. I enjoy the conversations, and hopefully we can do this again soon. So folks, AssetMark.com, we'd love to sort of connect with you. We have field consultants throughout the country. And my email is michael.kim@assetmark.com. I welcome your thoughts, questions. Like I said, I love this business. I love working with financial advisors, and hope to hear from all of you soon.
You were bold for putting your email out there, because I heard your email going off before we started recording. So so be gentle, folks, and be sure to like and subscribe to the WealthStack Podcast on all major podcasting platforms, and follow all things WealthStack on WealthManagement.com, LinkedIn, and X. Thank you all for tuning in. This episode is brought to you by MSCI Wealth Manager. MSCI Wealth Manager is designed to streamline client portfolio management for investment teams and the financial advisors they support. Leveraging MSCI's financial expertise, firms can deliver personalized portfolios at scale and facilitate efficient portfolio design, monitoring, and investment proposal generation while ensuring consistency with the firm's investment strategies. MSCI works with CIOs and investment teams across major banks, brokerages, RIAs, multifamily offices, and external asset managers to make it happen. Learn more at msci.com/wealthmanager.